Hello, everyone. Thanks for joining. This is how I use the Andrews Pitchfork here. I'm going to erase it. Everyone uses it differently. Everyone has their own style. There are unlimited ways to trade out there, but I'm going to show you my way. I keep it simple. I have many different charts. Don't follow this chart and because I trade on other charts with other indicators and strategies that I've built over the years. One strategy took me, I would say, 5-7 years. Is 89% right. Has been 89% profitable for the year. But that doesn't mean that it's not going to be unprofitable tomorrow. So today I want to cover Andrew's Pitchfork real quick and real simply and real easy for you, so you can have this in your arsenal. I don't see a lot of traders using Andrew's Pitchfork, to be quite honest with you, and it's I don't understand why, because it's extremely effective. Now, this is yesterday's trading. Today is May 8th. Yesterday was May 7th. So don't pay too much attention to these things over here, the sell, the close, um, because this is a not a real money account. I was just running some tests. I just want to show you Andrew's Pitchfork. So you go to Drawing Tools, Andrew's Pitchfork. Now I go on the open, high, and low of the day, and that's it. Then I fix it up a little. I touch it up a little bit to make it more exact. And that's it. And now we go to today. And as you can see, today was not a good day for trading at all. The price just kind of consolidated in one area. Let me show you what a bear trap looks like right here. This is a bear trap. This is extremely, high volume bar here. And this is a this is a bull trap over here. So we have two examples here of a bear trap and a bull trap. Let me show you what that looks like. Okay, so first let's cover Andrew's Pitchfork. So Andrew's Pitchfork, I draw it every single day of my trading, and it's not a lagging indicator. It doesn't lag like the stochastics or the MACD. So I can pretty much have a good gauge as to where the price is going to move to and touch. It doesn't always touch the 50% line. When it crosses the 0% line, it sometimes goes 50%. From 0 to 50%, it goes up 50% here. And this is what it usually would do. You can count on it doing this. It will touch the 50%. I heard there's an 80% chance that it will go and touch the 50% line, but it most of the day it just goes back and forth from the 0 to 50% before the 50 line, or from 100 to right here, somewhere here, 50% before the 50% line. Um, I don't know if there's a technical name for this, but if there is, please write to me below and let me know. So that's the Andrews Pitchfork, and as you can see, it follows the pitchfork. I can do this day after day and show you. I've been trading for many years. I've been day trading since '07, 2007. That's about 11 years, 10 years, 11 years, on and off. And then I've been trading futures since 2012. I moved from stock to futures, but that's another video. So let me show you two very interesting things that occurred over here today. Okay, so just quickly, one more thing. I do not trade from 9 a.m. to 9:45 a.m. That, or from 3:45 to 4 p.m. No, I learned this rule on Wall Street long time ago. You do not, unless you have a very solid plan for doing so, or a very solid reason for getting in, just leave it to the pros who have a strategy already set up for this. If you are just getting in and out of trades, scalping, and you don't have a good strategy for doing this, do not enter these waters. these are very, very rough waters for the noob, or and especially for someone who does not have a very tried and true solid trading plan. Now, on the contrary, I know people who made riches off trading the open and close, but they, they wasted all their money just trading throughout the day. That's on the flip side. But um, you need to have a plan. You need to know and understand that um, these are very quick moving times over here. So stay away if you can, or unless you have a solid strategy. And so yeah, let me show you the bear trap over here. Extremely high volume compared to the other bars. Unusually high volume here. And then, you have a green bar here telling you, this thing is broken. It's not going to continue going down. It looks like a trend here, but it just, they went and flushed all the cells here. And the same thing happened here. Doesn't have to have a long wick. Right here, you see this long wick over here. It doesn't have to be there. And right here either, as you can see, right? This is a bull trap right here. People thought, oh, wow, this is a strong market over here. This thing is going to continue rising in here, and it didn't. Actually, this is an interesting candle, right? I believe, don't quote me on it, but I believe this is called the shooting star. And what happened? It just flushed all the buys and took them for a ride over here. And then it did the opposite. It took them for a ride over here. So these are two traps that were set today. In the market, anything can happen, and every moment is unique. You have to have an exit as soon as you enter the market. Okay, so I hope this helped with the Andrews Pitchfork. Just to go over real quick again, this is the 50% line, very important line. 80% chance that once it enters the 0% line, once it closes above the 0% line, it's going to go to the 50% line. There's an 80% chance of that happening, according to experts.
It's 4:30 p.m.
Yeah, I have a little clock here, and but count on 50% off the 50%. Count on it touching 50% of the 50%. That will happen more often than to go from here to here or from here to here. And that's it. So I use volume. I use Andrews Pitchfork. I use the moving average lines. I have other charts set up, which I'll show you in other videos. And the moving average lines that I use are the 13, the 50, and the 200. The 13 I learned on Wall Street is a very effective moving average for the ES, and it works really, really well. Okay, so I hope you enjoyed this video. I hope it was informative, and like, comment as you wish.